Let's dive deeper into the action with our markets reporters as we get these sorts of earnings. Renita, what are you watching at the close?
I'm taking a look, Caroline, at Apple, which reached its highest since early May during the session on reports that it will purchase Intel's struggling cellular unit. So if you take a look at this quick chart, you can see that Intel also rose to its highest since late April during the day, and it would be divesting of a non-core business. Just to let you know, it would be around $1 billion, so it won't have too much of an impact on financials. But a Bloomberg analyst said that this is not surprising, and Bernstein says that Apple is the most natural buyer. Back to you, Sarah.
Thanks, Renita. Well, Apple and Intel may have been higher today alongside your three major benchmarks, but one area of the market that was really struggling was the home builders. If you look at the S&P 500 home building index, every single one of its 16 members today was in the red, falling 2.7%. And if you take a look at this chart, you can now see that the index has fallen just about to its 100-day moving average. We will see if this does act as a support. Now, what is going on here? For one, Pulte Group earnings, they reported this morning. They actually did beat on both the top and bottom line, but executives warned that profit margins could continue to come under pressure because of price discounts and also tariffs. And then also adding to that, you also had existing home sales data out this morning, which did miss estimates. So we will continue to hear about the health of the housing market. For now, those that watch charts will be paying attention to that 100-day moving average. Abigail.
Great chart there, Sarah. And one that I'm taking a look at, value versus growth. Value is really struggling, but on a long-term basis. This chart, in fact, is really pretty eye-opening. What we're looking at here is the price-to-book ratio on all world value stocks versus growth stocks. And back in 1995, into the tech bubble, the real height of it, we see that value truly underperformed growth stocks. And then coming out of the tech bubble crash, we see that value slowly but surely outperformed growth right into 2005 and then into the next financial crisis. Until now, we now really have value back at levels seen around the time of the tech bubble crash, Taylor, relative to growth. It kind of calls into question whether or not we could be shifting towards some sort of a big risk-off mood at some point, but not right now.